Good morning and welcome to the morning call for the 3rd of March 2017. Can't go past what I think is going to be an unbelievable theme in 2017. I've been talking about it for a little while, and the last 2 days I think have really iterated what is going to be this push-pull factor at the moment between monetary policy and fiscal policy in the US. I've deliberately put up what's been going on inside the US markets, and you can see already, even with what's going on at the moment, that they're down by about 0.6 of 1% across the board, and that's on the back of yesterday's really big moves on what everybody's pointing to, which is Trump's congressional speech, which is interesting considering he didn't actually tell you anything new. What is interesting from last night, and why I think it actually eased off, have a look at the US dollar, is that you finally have the Fed almost as a unison, sort of suggesting that rates are going to move in 2 weeks' time. And what I want to point to, Jerome Powell is very much on that idea that we have to now basically look at being March as being an absolute certainty. And even the most dovish people out there on the board, being Lael Brainard, she's been one of the most sort of fairly large components of the dovish cause. He's starting to talk about the word inflection point, and that we are actually reaching an area where they're both two mandates are being reached. And her is a real key point. She's a voting member. She's very, very close to what Yellen and also what Stanley Fischer think about, and that therefore really does bring into the idea that on the 16th, for us here in the eastern states, are likely to see a movement on that sort of idea. It is happening on the 15th over in the US, but it will be the 16th of March, so that's 2 weeks away, and something to be very much cognizant of. Other things I noticed overnight was the movement going on in oil. I know most of you will have looked at that as well. Clearly the US is going to be that case in point. We've always talked to you about that big sort of really big roof inside the oil price on the back that if we see OPEC, and that's what we did see last numbers, start to cut production, which they are doing, non-OPEC nations are going to pick up the slack, and the US is already doing that. And you've got a president who's also talking about having almost a fossil fuels-led recovery in the US, putting that point into it, and both of them were there. Look at the inventory numbers we saw and also the utilization of rigs, and that can explain why Brent and also WTI fell out of bed. Iron ore is the only other one I really want to highlight that did jump back up. It is really holding on to that 90 US a tonne mark, and that's really interesting. BHP's ADR was up 0.6 of 1% over in the US, so not a huge amount of movement, but may moderate our decline. You can see above me that the ASX is looking down. Basically, the futures market call and our cash market call is that it will be lower, but it may moderate on the back of it. And secondly, the other thing I want to look at is gold. Did hit 1270 this week and starting to ease off, and maybe that risk sort of trade, which has been going by stealth, is starting to slow down as well. Other thing before I go, if it is, I understand the first Friday of the month, of being month of March, but there is no non-farm payrolls tonight. It's actually next Friday. So those of you that have had that in your diary, just be cognizant it's not tonight, it's actually next week. And therefore next week is going to be a huge amount of data considering it's the first main week of the month. Therefore all the central banks are out as well. So be cognizant that that is something to be watching. Nothing to do with the RBA. It's going to be very, very boring, but it is going to be the ECB, BOE, BOC, etc., etc. Have a good day, have a good weekend, and speak to you on Monday.